Alright, guy. My name is Alatakindamila Joseph, aka Damochi. I'm going to be taking you guys on price action using support and resistance with confluence with chart patterns and candlestick patterns. Now, when you're taking a trade, you don't just take trade with just one technical factors alone. You combine them with so many technical factors. Like for example, because I have a key level here, doesn't mean I will just take my trade from here and go without a confirmation. So what I do is I take them with confluence. For example, we have a key level here. Imagine checking it with this a trend line or probably 50 fib. Oh, I don't have it on this, so let me not just waste our time. Okay, so you don't trade them alone, you trade them with confluence. And also, when you're talking of key levels, you don't take them as line. They are not line. They are what? They are strong zones. They are zones. And what qualifies a zones to be a strong one? A situation whereby they've been tested multiple times. Like this, we have a touch here. One, two, three, four, and it's still support the market. I'm sorry, resist the market over here. So when the levels have been tested at least three times, yeah, it's an indicator that that level is actually a strong level that might hold. What did I use? That might hold. Okay. So without wasting much of our time, let's get the play tools and get into the business so that this video is not going to be a long one. Okay. Um, okay. Let's cut it from here. I think we have one stuff here. We have a level here. And we have another one here. Okay. So I said we take it as zones, not levels. Let's fast forward. We have a break below. Wait for the market to go back to that area. Then we slow down to 4 hour time frame. I take my trades on 4 hours, sometimes 1 hour, depending. But I do my analysis on daily time frame. Okay, so I said that Couchera is actually what market break below, go back to retest, come back and then give us a double top or inverse. I'm sorry, a double top or head and shoulder pattern for a sell. What I mean by that is when we have a situation of market going to a place, coming back, then giving us double top, then we move, or giving us an head and shoulder pattern this way. You're going to see that as we proceed. In fact, it happens every time. Okay, sorry. Something like this. So let's get back to the chart. So that's my entry model. Now you see, this is what we have here. For I tend to take my trade from there. Sometimes I wait for a retracement to maybe this level and start going down. But actually, I tend to trade my trade at the close of this candle. Now if you can check yourself, we have two chart candlestick patterns there. We have pin bar, we have this pin bar giving us a candlestick formation pattern. We have engulfing bar here giving us another candlestick formation pattern. Now combining these two together, this is actually a double top for me because the market actually closed close below my zone. I expect it to continue going up, but we have a strong bullish bearish presence which pull back the market downward, which is a clear indication for me that the market doesn't want to head upward. So I might decide to wait for the market to pull back to this area and start going down. Then most times I tend to most times I tend to, where is my zone? Okay, I think we went back far. So sometimes I tend to take my trades from there. I think it's here. Immediately I sight that stocks I'm looking for, which is this. So I tend to take my trades immediately when I see that. So let me say I'm taking my trade from the close of this candlestick, of this bullish engulfing candle. Then we have this. Now to note that this stuff can actually this strategy can actually be taken on any time frame. Okay, I'm a daily swinger. I swing on daily time frame, so which I took my trade on the 4 hour time frame. No matter whatever strategy you actually trading, whatever time frame you're actually trading, you can actually use this particular model. You can use it on 4 hours and you take your entry on 1 hour. You can use it on 1 hour and take your entry on 30 minutes or 15 minutes, depending on the stuffs you actually trading. Okay, so that's how I take my trade. I take it from the close of that candle and targeting the next zone. From the next sorry about that. From the next zone, we can actually start looking for, okay, that's TP for us. Now going back to this, we can actually start looking for another entry to the upside. Maybe we have something like this, or we continue going up, but just follow the key levels. Okay, all right, we have a first touch here. Proceed, then boom. Oh shit, you see that we have first touch, and what I'm actually looking for is for the market to go this way, then come back and terminate himself in this termination zone. Then I take my entry to the upside, but unfortunately the market didn't respect that and it pushed down. Okay, so then since we already broken to the downside, I'll start looking for a sell, and let's see. And do you see that the market came back into the zone? Like it break the termination zone above, then coming down, which is an indicator that the market doesn't want to go down anymore, but it's forming a chart pattern here. Watch, markets come this way, reach here, we expect it to terminate here, but it doesn't. It broke down and it's coming back into here. Definitely it's going to come back to give us this and start moving ahead. That's what inverse end and shoulder pattern. So do you see that? Do you see what I'm saying? So when the market come back to this area here, immediately I see this kind of bullish candle breaking my termination zone to the upside, I will set my buy limit immediately, and my stop loss will be below the next swing. Don't forget I'm trading on 4 hours time frame, so I'm used to my SL. My SL ranges from 20 to 50 pips most of the time, so I target the next zone. That's how I take my trade, and you see that think the market doesn't want to respect our analysis. But another thing you need to know is you need to work on your emotions, because sometimes the market will decide to play with your with your with your emotions. Okay, imagine the market going in favor, reaching here, and it drop boom. If you don't have a strong emotion, like your emotion is not strong, you don't have a strong psychology about the market will just come here and you think, oh, and you maybe you panic and close the trade when the market was, but often you reach here and start going back to ATP. So that's how it happens most of the time. Okay, so fast forwarding, let's go back to our daily time frame. Okay, we have this. Let's proceed. Do you see that actually this happened, but it didn't actually happen inside my zone, so that's not a trade to be taken by me. And we have this. Boom, we have a boom to the upside. So now the market actually went up. Now the price goes up. Is either we expect a retracement to this level and we target the next level, or we wait for the market to start terminating itself from a level around here, then we look for a set to the downside. You see, you plan your trade and you trade your plan. Next level is going to be around this area, right? If I'm not mistaken, we have this. We have one touch, two touch. We have one touch here, two touch here. You can see the market rejected. The level rejected is the price around this area. Okay, so going backward, we have another touch here. You can see that. So I think that's a strong level to behold. Is going to or might hold. Okay, let's proceed. I draw my levels and wait for markets to touch, step into our zone. Okay, right, so let's do that now. Let's continue. Market didn't want to reverse down, but stepping into our zone. Let's switch down to 4 hour time frame. I will have my termination zone ready here, and then wait for the price to get back to that point. But I think the market doesn't want to give me an entry there. If I didn't get entry there, then we'll look for it in the next zone and start looking for entry. That's a buy bias now. Boom. This is if you check something here, see this. You see that the market came all the way from here, come back here without giving me entry here, and it didn't give me entry. Now this is something you should notice. Now once you taking your first trade, second trade, okay, we took this trade here, boom, we take another one here, boom. Now you need to be adjusting your line to the current market price. Okay, now if you check now, the current market price is actually this area. If not, I wouldn't have missed this particular trade here, but notwithstanding. So I don't know if you get my point. Like, you adjust it to the current, I don't know if I said it in this video, but we talk about recent break, recent structure, focus on mostly recent structures. Okay, and that's obvious structures. I don't know if you get my point. So that is what. Let's proceed. And we have boom to the upside, and then the market came back into the zone. So means the market doesn't want to continue up. Imagine market breaking above, going this way, then coming down, which I told you guys before that I love it when I see this. I just expect the market to come back to this area. When I see this, I don't wait for anything. all I just do is set my limit and leave the market to do its things. So me seeing this like this now, I am taking myself straight up because I saw something. What I saw this market terminated here, come back, break to this place, coming back definitely is going to give me what I want, which is what head and shoulder pattern. As you can see, we have the left shoulder, the head, and it will come back here definitely to give us what the right shoulder and boom to the downside. So that's what I'm actually expecting. Okay, my target will be around this area. That's how I take my trade. Let's proceed. Let's fast forward. Boom. What do you see? And another thing you need to learn how to do is you need to learn how to be patient. Be patient. I think we already hit TP around this area. As you can see, very simple. So now giving us this, you can actually be waiting for a buy if you can see your entry here, or you wait for the market to break. You can see that I actually see a buy bias here. Now this doesn't actually work on like this strategy doesn't mean that all trades is 100%. Okay, now what do we have here? I have my bias here, right? See, I have what I'm looking for here. So let's take this entry and see if it's actually still going to give us what we want. Okay, from the close of this candle, right? Do you see that? Do you see that? Imagine I got stopped out. Okay. And the market goes back. Now, one thing you should know now is that imagine me getting stopped out. This same pattern again for me, and I get stopped out. The market goes back into my zone. Doesn't mean when I see the market coming back to this area I won't take it. My brother, I will take it. Now, why I have the effort, why I have the mind to take that is because why I have that mindset of taking that trade at that time. I think some people will call it revenge trading. No, it's not revenge. Why I'm taking that trade at that moment is because I have okay. Imagine we have so far we already have 4 trades in TP. 3 trades in TP, and I have 1 loss. My risk management is still intact. Okay, now me having this now, definitely I'm taking this trade, and I will have opened another position here as market broke up my to that same place. Okay, so oh, we already hit TP self. I didn't notice. Do you see that here? We already hit TP. So that just it. Like very simple, 3 steps. You get your the current market direction. You mark out your key levels, and you take your entry. Very simple. So um I'm a swing trader. What I do is I mark my entry on I mark my key levels on daily time frame, and I switch down to 4 hours time frame to take my entry. Depending on the kind of trader you are, you can actually map out your key levels on 4 hours and take your entries on 1 hour, or you mark out your entries on 1 hour and take your entry on lower time frame. Okay, so I think I'm going to be closing this cutting the video short now. Okay, see you guys next time. Thank you.